Hi everyone, it's Evan here from the Trade Risk on Wednesday, February 22nd, here with a midweek market recap video. We're going to cover all of the major markets, the current market environment, and then finish off the video looking at some individual sectors. So looking at the action today, S&P 500 SPY ETF finished lower 21 cents on the day, and that is down minus 0.09%. If we look at the action from today, you can see we did print an inside candle. So that means we traded entirely above yesterday's lows and below yesterday's highs. So that's something to pay attention to going forward. Does this lead to some fireworks, maybe some more two-way trading, or is this just a slight pause here in the overall uptrend? You could see volume was pretty light today, even though it was a Fed day, didn't really seem to impact the market too much. If we look at the weekly chart real quick before we get into that daily, you can see we've only traded 2 sessions this week. We had the holiday on Monday, so 2 sessions of trading. We're already up 0.5% on the week, and you can see we continue to be in this strong trend higher. If you were to take the distance from where we are now to any of these moving averages, you would note that we are in the kind of upper echelon, upper tier of sort of overbought, stretched levels. Again, nothing new. We all sort of know at this point, I think, that we are in some very overbought conditions. And I just want to point that out to say, hey, look, it's still here. And typically this leads to sideways consolidation or some type of pullback. Again, doesn't have to happen tomorrow, but that is generally the transition that you will see. So if we go back down to the daily chart, you really haven't seen any selling pressure yet. Going back to January 30th, this is probably the last semi-meaningful day of some selling pressure that we saw in the market, maybe some here on the 1st of February. But since then, it's been pretty clear sailing here to the upside. So there does seem to be a lot of frustration out there and a lot of questions. How high can this market go? Isn't this so unsustainable, so on and so forth? And we really just don't have any signs that this market wants to stop right now. We all know it will. It will eventually, right? We're going to see a pullback at some point or some sideways consolidation that we eventually roll over from. But, until the evidence starts stacking up in that direction, it's best to sort of embrace the market as hard as it can, or sit on the sidelines if this is not your type of market. But it's best to embrace the market that we have in front of us, not the one we want it to be. And two other important points I want to make is you can continue to, buy into this market. In fact, you could have done a lot of buying today. And I don't think there's anything inherently wrong with that as long as you have your stop losses in place. So I think it's fine to continue to participate in this market, continue to put on new positions, as long as you have an exit plan. As long as okay, we are in an overbought market, but it is running to the upside. There's strong momentum. I want to participate in it. I think that's fine as long as, again, you have the exit if the market starts to pull back on you. So that's the first point. The second point is there's so much sector sort of health and participation in the S&P 500 right now. It's very rare that we have so many sectors all in such healthy uptrends, most near all-time highs. With the exception of energy, pretty much every sector is kind of fair game in healthy technical setups. And that type of broad-based breadth is so important to keep in mind, because there's so much rotation going on within this market underneath just this 3-letter SPY ETF. There's so much rotation going on that continues to climb these numbers higher here. So in other words, if financials want to take a 3-day pause, industrials pick up the slack, or we see rotation into materials, so on and so forth, and we can continue to sort of climb this wall here in what looks like extreme conditions, but really the sectors are kind of rotating amongst and within one another. And you're seeing some pullbacks. You're seeing some breaks. Again, IBB would be one today. You can see this has been down really the past 4 days. It hasn't done anything to help support this rally, but tomorrow's day number 5, maybe this is the new sort of, the new sort of rotational candidate, and we see the dip buyers come in here at the 8-period moving average and start to climb this higher, and something else that was strong today, like staples, takes a break, or whatever the case is. So keep that in mind. There is rotation going on under the hood, and it continues to sort of keep this this party going here on the upside when you're looking at just the major averages. So that's enough rant there on the S&P 500. Pay attention to this inside day. Pay attention to Tuesday's lows. I think back below 235.40 or so. If we start to close below there, maybe that's your clue that there's some two-way trading going on. If we go to the IWM today, we did briefly break below yesterday's lows, but dip buyers did step in. We filled this gap. So it is something to pay attention to. It was the laggard today, down almost 0.5%. We know the Russell's been lagging. It is it's still up the least of all of the major averages, but it recently did break above this critical level here, this 138 area, which was prior highs from December, January, and recently broken out here in February. So we're looking to see if this can continue the rotation and continue to pick up some slack and maybe leg higher here. That would be the next sort of fuel for the market if the small caps can start to participate here. We're long IWM, or we're long TNA right now. We got long that on Friday, and again, using this as a general support area down here at 138, that would be our sort of trade thesis line in the sand, where if we started to break below there, we would be out of this trade. But we're involved in the small caps right now, looking for some continuation higher. We'll see how that plays out for us later this week. The Qs continue to gracefully move higher, up 5 cents on the day, and again, just tremendous strength here. Tons of in high beta, high cap tech land. There's tons of names at all-time highs or near all-time highs, and there's just plenty to sort of rotate through and continue to keep this rally and this train going to the upside as well. So pretty impressive strength all around. So getting to some of the other major markets here, TLT, not doing a whole lot. It was a little bit volatile today. It was Fed day, but it did manage to close higher on the day. Still trading within this pattern. That's what I'd be paying attention to. So keep an eye on this 119 area and then this 122 area on the upside. USO, wrote a post yesterday on this market. Oil continues to consolidate. We tried to get this upside breakout yesterday. Noted it did close near the lows of the session, not that inspiring. And then today we saw follow through to the downside. So still moving sideways, still don't have that break one way or the other, but we do have a lot of tight overlapping trading. I know volatility here is dried up in the oil market, so something to pay attention to. I'm still waiting to play for a potential breakout and trend move, but don't see anything just yet. Tried to short it down here. That didn't work. So just paying attention pretty closely to what's going on. UNG also getting crushed yesterday. That's natural gas, down 9% yesterday. A little bit of a rebound today, or at least just stabilization. Can point out that it's coming back into some prior support here from earlier in 2016. And again, I would always want to suggest that you chart the futures contract, because that is going to be a much cleaner picture of sort of true supply. These ETFs do lose precision over time, especially when you're looking back over a year or two. So keep an eye on the futures contract. I think there's support right around 255, 260 in natural gas. So pay attention to that. If we go to gold, this one here didn't do a whole lot today, but it is looking fairly interesting here. It's been quiet over the past almost 2 weeks of trading now. You can see maybe some type of inverted head and shoulders there if you go down to an hourly chart. Let me see if that's just my eyes. You got something going on there, right? So this looks like we could start to emerge here if we start to get back above 118.30 or so. So keep an eye on that if you like GLD, silver. This one not as actionable, just continues to really grind higher. Bulls still have the uptrend until it loses the 8 or 20. I think that would be your clues that something's changing. But for now, this definitely looks to be intact. So that covers some of the major markets. Let's move into some sectors. Start with XLK, which is just, this is a thing of beauty. I don't really need to say too much more than just looking at how this is levitating higher here. Just all green candles, green volume across the board. Tremendous strength there in XLK. XLP accelerating recently in the past few days. You can see this one ever since breaking this trend line back here in early January. This one's been off to the races. So it's had a strong month in February, coming back to prior highs here. Looks good. Maybe could use a bit of a rest, but continues to look strong. XLU, similar camp after it recently broke above this 49.10, 49.15 level. This one's starting to accelerate higher again. You can see on the weekly chart, looking good. Maybe it's got a date back up here with these old highs at $51, $52, $53. So in motion back to the upside in XLU. Financials also looking good here. New all-time closing highs continue to march higher after breaking out last week on Friday the 10th. And then finally, XLB tried to really get going earlier in the day, but stalled out just a little bit. This one's been a minor laggard when compared to some of these other sectors. So pay attention to the materials. If we can get continuation higher tomorrow, then we probably get a retest of these highs here from January. On the downside, IYT stumbling just a little bit. Again, really just kind of nitpicking because things are so strong that this is actually looks weak, which is pretty remarkable. But you could see a little bit of stumbling here. Again, no technical damage, just something to take notice of. IBB, we talked about that earlier, pulling back now for 4 days at this point. So this could be a good rotational candidate here if buyers want to step in some of these fast moving averages. Had a nice session last week, or a nice run last week. A little bit of a cool off so far. So let's see if dip buyers step in there. You could also look at XBI, which we're currently still long that. And then finally XLE, which is basically the only sector that is kind of acting in sort of bear market mode, where it continues to sort of trade lower. I think it's down about 9% off highs. You get a couple of trend lines here that you could use depending on how you want to draw them. I'm not looking for any trade setups off of those per se, just general guidelines to look at where we've come from and where we are. So maybe this $70 to $71 level provides some cushion or some rebound here in the energy stocks. So that will be the end of it. Hope you guys had a great day trading. Hope you enjoyed this video. Thank you for watching and hope to talk to you soon.